Welcome to the Kapital News. I am your host, Alex Coraitis. Today is Thursday, April 29th, 2021. Thank you so much for joining me. The title of today's podcast, Job or Just a Paycheck? As President Biden said in his address to Congress yesterday, he said, why should you have to choose between a job or a paycheck? This is what the man said. There was a lot to unpack yesterday, but we also had to deal with Jay Powell, the chair of the Federal Reserve, and his remarks following the conclusion of the FOMC meeting yesterday. But that's what our dear leader, the President of the United States, said. Why should you have to choose between a job or a paycheck? So what this simply means is if you want a job and you can find one and you're qualified for it, well, good luck to you. That's your choice. But if you don't want a job, you can still get a paycheck. Where's that paycheck going to come from? Evidently, it's going to come from Uncle Sam. Well, Uncle Sam's as broke as a joke. So where's Uncle Sam going to get the money? Well, he's going to have to borrow it. He's going to have to beg for it. Then he's going to have to spend it. So it means we're going to have to print the money. So this is a never-ending game that our government and our central bank wants to continue to play. It's open season. The Democrats are never shy about this type of stuff. They think money grows on trees. They don't understand the concept of money. A lot of people don't. Even a lot of people that have a lot of money don't understand the concept of money, its creation, its generation, where it comes from. All of that, its effects. They just simply do not understand it. It's not that complex. It's not that difficult to understand, but people don't want to take the time to understand it. People across this country, across the planet, actually think that governments just have money. Well, they have it. It's the government. They just have the money. The money. They get it from us through taxes. Now, although in this country and many others, the types of deficits that are being run up are beyond criminal, beyond absurd, beyond ridiculous, but that's what they're doing. In this country, our deficits outstrip the taxation, the tax revenue that we bring in to the federal government. That is criminal. That is a ton of money. The $3.5 trillion that we bring in via taxation is an incredibly large number. $3.5 trillion. That is such a large number, and people don't even comprehend that. They just, sort of take it for granted. Well, okay, $3.5 trillion. All right. We're going to spend about $8 trillion this year. And that's just at the current rate. That's just with what has already been established. If the government should pass more spending measures, which they're likely going to, because even some form of infrastructure is likely to get passed. Not in its current form, but there will be some sort of bipartisan support because roads do need repaired. Bridges do need built. Our airports, our seaports, these things need fixed. We talked about this before with the American Society of Civil Engineers. We went through their report card and through the 12.5 areas of infrastructure of how they break it down block by block. We do not have a good grade. We have not had a good grade on that report card since its inception. I think over 20, maybe even 30 years ago. Okay? So something's going to get passed. And as I stated yesterday, and as I've stated many times before, it does not have to be the big enchilada. It doesn't have to have a price tag of $1 trillion. You can do it piecemeal. A couple $100 billion here, a couple $100 billion there. But before you know it, it will add up to over trillions of dollars. This is, as I have stated since last year, this bailout money. This is the sit down and shut up money. You take it, and the deal is you sit down and you shut up. You don't question where it came from. You don't question how it got here. You don't question what it's actually going to cost you and the country in the short term and in the long term. You don't ask those questions. You do not go out onto the streets to protest this government, our central bank, etc., etc. You don't do it. You take the money, you sit down, and you shut up. And of course, with the amount of debt that so many people have, it was just a pass-through bailout as well. Not so much the same as what occurred during the Great Financial Crisis a little over a decade ago, where it was a direct bailout of the financial sector. I think if that would have taken place this time around, of course it did, but they had to do the hybrid. They had to do the direct. They didn't have to, but they did the direct with those businesses across the spectrum. But this time they had to give the people money, because otherwise you would have seen protests and riots and maybe an outright revolution in this country, because the memory would have been too fresh in people's minds. They got a bailout a decade ago. Now they're going to get a bailout again. What about me? What about us? What about the people? So they gave the money to the people, and then they wrote the checks, and they paid off credit cards and their car payments and their mortgages and blah, 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 blah. That's all it was, and all it continues to be. We got the first print of first quarter GDP coming out at 6.4%, somewhere around market expectations. Now, wouldn't one have to argue that this is the result of those base effects that we've been talking about? So is Jay Powell and company at the Federal Reserve, are they going to say, well, this is a fundamentally strong number at 6.4%? Or are they going to say, like they're going to argue about inflation? Well, it's really not a real number because it's just a result of the base effect. Things were so low and so bad last year, any type of increase is going to show up as a bigger move. So are they going to dismiss that, or are they going to buy in to the 6.4 figure? Is that going to continue with their narrative that there is a strong, vibrant recovery underway, which of course we argue there is not? There's going to be a short-term impulse. When you throw $8 trillion into the system, what do you think is going to happen? But it's going to come at a very hefty price tag, and it's going to be for the long term. This inflation is not going to be transitory. It is structural. It is going to be with us for quite a while, and it is going to be global, and we're already witnessing a lot of inflation around the world at a fast clip. Remember, those weakest links break first, and it's starting to make its way up the chain to larger economies. And if we have time at the end of the podcast, I want to read a very brief article out of France 24, a news outlet over in France, with respect to current and serving military figures within France calling or predicting a civil war. Okay, so we're going to get that. So again, weakest economies, and now we're getting to the big boys, as I said was going to take place for the past couple of years before COVID-19. So we have a lot to contend with. We are far from out of the woods. We still have those moratoriums on student debt payments, on mortgage and rent payments that are going to come to an end at the end of June. Now, that does not mean that they're going to come to an end, because they were supposed to come to an end before. But Congress kicked the can further down the road. So what is going to happen here? These things have not been dealt with. So the 6.4 GDP figure, which to me is a bunch of BS, but that's par for the course, strip out all of the excess government spending, strip out all of the extra spending by consumers, courtesy of Uncle Sam giving away this quote-unquote free money, and you have nothing. And then if you were really to calculate inflation properly, it would be a horrific number. And that's likely something we're going to find out later this year, as some of these base effects start to wear off, most definitely next year, as we really start to see inflation pick up. And all of these stimulus checks, I hope, stop. But they may not. There might be another round. They may keep coming. Some of this family package bill, whatever the hell Biden and the Democrats want to call this, more money per child, per month, blah, 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 blah. That's a lot of money. And a lot of people are still employed. They don't actually need it, but they'll take it. Government's giving it to them. They will take it. They will spend it. They will do stuff with it. But if you were to strip all of that out, how strong is this economy? It's not. That's why this is smoke and mirrors. This is a foundation built on sand. It is crumbling by the day. They know it. That's why they continue to push for more fiscal stimulus, for more monetary stimulus. They know they're trapped. They know the game is over. They're just out there spinning a narrative and hoping that people continue to buy it. They hope that these stimulus checks really will serve as sit down and shut up money. They don't want you paying attention. They just want you to think you're the lucky little calf that's being fatted. They don't want you to realize that you're being fatted because they're going to take you to slaughter. That's what's likely going to happen. That's what's likely going to be the end result. The government does not care about you. So do you think all of a sudden they've become empathetic and sympathetic and really care about we the people? Hell no. Hell no. And again, I have 28 trillion pieces of evidence in my corner, and it's growing by the day. And according to the U.S. debt clock, in 4 years' time, in 2025, I'm going to have 50 trillion pieces of evidence in my corner. You got nothing. You have, well, I like the Democrats, I don't like the Republicans, or I like the Republicans, I don't like the Democrats. Screw them all. They do not care about you. Stop supporting them. Stop giving them your vote. Stop giving them your respect. They have not earned it. They do not deserve it. Just because they say something that you agree with doesn't cut the smell test. It doesn't pass it. It's no good. Look at what they have done. $1 trillion deficits, one administration after the next. They don't care. There is no structural reform, but there are structural problems. There's a lot of structural problems that remain within the job market because people are being conditioned for universal basic income. You don't have to choose between a job or a paycheck. You shouldn't have to be put in that position. You just take what do you want? What do you want? You want the job? If you can find one, you qualify, go get it. If you can't, don't worry. Uncle Sam's going to write you a check. This is modern monetary theory in action. They're just putting a different name to it. The family plan, whatever they want to call this thing. Human infrastructure. Okay? That's all it is. That's all it is, and they're going to use it right now under the guise of family support. You got to help the children. Got to help the children. Got to save the children. It's always all about the poor little children. And who wants to take money away from the poor little children? So that's how they're going to slide it in there. That's how they're going to start it, and people are going to soak it up. They're just going to love it. They're going to think, what a gift. What a gift. Not realizing the inflation that this generates, because that's the money printing, the upward price pressure, so the effects of that inflation. People just aren't connecting the dots. And then the direct taxation that is going to have to be levied in order to help pay and finance this, which I have been preaching and screaming about for the past 2 years. You cannot run trillion-dollar deficits and not have your taxes go up. And of course, that wasn't a problem for the fiscally responsible conservatives under the Trump administration and when the Republicans were in control of Congress. But now it's a problem. Now the Democrats are in charge, and woe is us. Woe is us. Can't have trillion-dollar deficits. Now this is out of control. And people continue to buy it. Conservatives continue to buy it, and conservatives continue to hope that, my goodness, if the Republicans can't get the act together and win in 2022, it's unbelievable. What if they win in 2022? What are they going to do? They'll just spend more money on their side. It's all it is. It's just their form of big government. And round we go. How people cannot see this is beyond me, but it's just, hey, I want to be a part of the red team, or I want to be a part of the blue team, and that's it. Whoever's there, that's our team. We don't care. It's all about winning. It's not about the country. And of course, the country suffers as a result of that mentality. So GDP with the bogus 6.4%, as far as I'm concerned, strip out all the government spending, strip out all the extra consumption by the consumer because of Uncle Sam's checks, really calculate inflation as it's supposed to be calculated, and you got nothing. You have nothing at all. It's all smoke and mirrors, but people are going to buy into it. Market performance, we have the dollar index up slightly overnight at 90.65. Bitcoin trading at $54,000 a coin. Not too much market movement in Forex overnight currently. Overnight futures trading on the equity markets. I'm looking at a sea of red here. We have the Dow Jones Industrial Average down about 0.2%. The S&P 500 down about 0.3%. NASDAQ 100 also in the red, down 0.5%. Cash trade in Japan also in the red, down 0.6%. A sea of red across the pond in Europe, with the exception of the Spanish markets putting on a gain of 0.25%. Cash trade in Australia also in the red, down about 0.9%. And Chinese stocks also in the red, down 1.2%. So you would think on all of this fantastic news of GDP, just, 6.4% in the largest economy on the world, wouldn't everybody be happy? What's going on here? WTI, $64.50. Brent, $68 $72.10. So inching ever so close to that 70 handle once again, and we're likely going to get there and probably exceed it. Natural gas, $2.89. Gasoline still north of $2 at $2.09. Gold and silver pulled back today and are continuing that overnight. Gold, $1,769 per ounce. Silver at $25.95 per ounce. Copper pulled back just a little bit today as well. $4.48, but still close to the all-time high, which it just hit. So we continue onward and upward in the commodity space. And to round it out, Uncle Sam's 10-year junk note yielding 1.65%. 1.65%. So we'll continue to monitor this story. As I stated yesterday, we have to be on the lookout for a large supply of treasuries coming onto the market, because you don't just get to spend $8 trillion because we don't have it. We just simply don't have it. If you just took in the $3.5 trillion, where's the extra $4.5 trillion coming from? That's going to be our deficit. Where's it coming from? Oh, wait, well, we're going to have to issue treasuries. Who is going to buy them up? That is a lot of money. That ain't chump change, folks. That's a ton of money. So it's going to be the Fed, because foreigners don't want it because it's junk. I mean, there's going to be some foreign appetite for it, but not too much. Not too much. We've already seen a distaste by foreigners for U.S. debt. And they're dealing with their own problems as well. They got to do the same thing over there. So ECB's buying theirs up, Bank of England's buying theirs, Bank of Japan, Reserve Bank of Australia, People's Bank of China, etc., etc. It's the same game. And what's going to happen, of course, now, I think, is when we hit the next leg down, now central banks are going to have to decide who they're going to save. They're going to save the government, or are they going to save corporations? Because they're not going to be able to do both. Because this is the world of exponential, and unfortunately, with this respect, it's in the wrong direction. So they're not going to be able to go in and do like they did last time with these emergency facilities and actually go in and buy debt, corporate debt, of the world's largest corporations. And again, I stress the world, not just U.S. corporations, but the world's largest corporations. They bought their corporate debt. They didn't have to. They bought corporate debt of Apple and Verizon and so many other mega cap stocks. They didn't need bailed out. They have the cash. They didn't need it. Yet, there's the Federal Reserve coming in. And Jay Powell was asked a question yesterday about the homeless camps that are almost around his office down in Washington, D.C. He drives past them to get to work. Oh, well, we have these policies, and I am going to go see them, he says, but I've been awfully busy, and I'm going to wait till things sort of settle down because I don't want the news media to make the story about me. You know, it could be any of us. It could be you, he said to the reporter who asked the question. It could be you. It could be your sister. But, of course, he never said it could be him. No, of course it's not him because he has access to the printing press. He ain't going to be living outside in a tent. No, it's going to be you or your sister it could happen to, but not to him. Can't happen that way. No siree. But he can't figure it out. He can't help those people. He can give money. He can lend it to the world's largest corporations that don't need it, but for somehow he can't figure out how to give it to the man on the street. Not that I am arguing for that. I'm totally against that. But come on. Well, I mean, in our face, taking us for suckers. You can give it to Apple, but you can't give it to Joe Schmo on the street. Yeah, all right. Because nobody overrules you. Who's going to stop you? They've already broken their charter. What do they care? Congress doesn't care. Congress loves it because it finances all this stuff, so they don't have to go back to you and say, "Oh, hey, we messed up. We got to make some sacrifices here." You know, no politician wants to do that, so they can get away with it. Ridiculous, unbelievable. Let's look at the Department of Labor's report with initial jobless claims. So for the week ending April 24th, seasonally adjusted comes in at 553,000. Last week's figure was revised upward by 19,000 to now sit at 566,000. So we are now, again, continuing to be below where we were during the depths of the great financial crisis on an apples-to-apples basis with respect to regular state unemployment benefits. But we'll get to the PUA as well, and we'll do that quick math. So initial jobless claims non-seasonally adjusted comes in at 575,000. For the week ending April 17th, continuing jobless claims seasonally adjusted came in at 3.67 million. That is actually higher than the prior week, an increase of 9,000. And on a non-seasonally adjusted basis, we're about 3.8 million. And then getting to the Pandemic Unemployment Assistance Program for the week ending April 24th, we get 122,000. So with the PUA combined with the regular state unemployment, we're about 670 some odd thousand. So we're still above in total where we were during the depths of the great financial crisis. We're getting very close. I believe the number was about 665,000 was the peak during the GFC, so we are very close, likely to break below that for the first time in a year, most likely next week, but of course, we'll see. If these numbers continue this direction, we'll be very close, so we'll see what happens next week. In aggregate, regular state, federal employees, newly discharged veterans, the PUA and PEUC programs, extended benefits, state additional benefits, and a work-share program gives us a grand total of 16.6 million in aggregate, still collecting some form of unemployment insurance. This is for the week ending April 10th. Recall that the aggregate figure lags by a couple of weeks. So 16.6 million. This is a week-over-week decrease of 846,000. The biggest decreases being in the PEUC program, a decline of 413,000, followed by the PUA program, a decrease of 335,000, and regular state unemployment benefits, a decrease of 73,000. At 16.6 million, this gives us a de facto unemployment rate of about 11.9%, still right around double the official unemployment rate, which currently sits at 6%. Next Friday will be the first Friday for the month of May, so we will get the official jobs report for the month of April, and of course we will go through that report in its entirety as we have been for the prior year. Federal Reserve's balance sheet cooled off from last week's all-time high, decreasing by $40 billion. That's basically chump change, almost doesn't even register on the chart, but that's been par for the course. We've seen what the trend has been back-to-back all-time highs, followed by a little bit of a reversal, and then it goes back up and up, okay? So we're still at $7.78 trillion. $7.78 trillion on the Federal Reserve's balance sheet, just flirting again with an all-time high, as we made last week, again just below it by $40 billion. And that is ultimately the narrative that matters. If the equity markets continue to buy this narrative of liquidity, and the bond market for that matter too, and so many others, if they continue to buy it, then we will continue to grind higher. When the market says enough is enough for whatever reason, system exhaustion, something else, some sort of exogenous shock, well then, that might be kaput. It might be game, set, match. Your guess is as good as mine when that happens, but I do believe market forces will prevail at the end of the day. And as bad and as devastating as it's going to be, I am actually hopeful for that, because that means that market forces still actually exist. Otherwise, we are completely 100% command and control. I don't want to live under that type of regime, do you? It's going to be painful to deal with the market forces because of all of the crap that these idiots have put into the system, but at least if there is that type of collapse, and it doesn't mean it has to be a quick crash, it could be something that takes time to resolve itself, but my goodness, that's what you actually want to see, because that would be getting rid of the waste and the malinvestment and the over-leverage. That's what you want to get rid of. That would be getting rid of the zombie corporations out there, which are extensive, or at least have them restructure. That's what we want to see. And I hope that does happen, as painful as it's going to be, because otherwise, the alternative is complete command and control economy. Totally a first world banana republic. No ifs, ands, or buts about it. We're already getting close to that point. That's going to be what breaks it. Or that's what's going to be that makes it. So we're either going to be in a first world banana republic, no ifs, ands, or buts about it, or market forces are going to take over, and it's going to look like a banana republic because of what they've done. But at least, hopefully, after that, if market forces do prevail, we can rebuild from a solid foundation. But again, I have great concerns as to who's going to be at the helm pushing what narrative. Will they blame free market capitalism, which has absolutely nothing to do with what we are in? Or will people adopt more socialism, communism, fascism, or some other system that they think is fantastic? Because that's the mindset. And there's not much difference between fascism, communism, and socialism. There's really none. You can use them interchangeably as far as I'm concerned, because it's command and control. It's just a question as to whether or not there's a cozy relationship between big business and big government, or it's just all government. But at the end of the day, it's almost all the same. So use which word you want. Now, since M1 and M2 are updated monthly, we do have those figures. So M1 has hit an all-time high at 18.68 trillion. That is a big number, folks. 18.68 trillion. Of course, they rejiggered the calculation, and we caught that just in time on the Capital News with our Capital Economics presentation. Check those out. We did those, I think, already back in February. You can check those out on thecapitalnews.com, and you can still find them on our YouTube channel as well. Monetary Measures Part 1 and Part 2. So you can see what I'm discussing here with these vertical charts and how it's all about liquidity and throwing money into the system and watching the stock market continue to grind higher with it. The correlation is... You can't miss it. You can't miss it. So 18.68 trillion, that is a month-over-month increase of $280 billion. $280 billion, chump change. And then M2 also hitting an all-time high at 19.89 trillion. And that was a month-over-month increase of about $250 billion. So chump change there as well. These are huge numbers. You have to recall during the Great Financial Crisis, the broadest monetary measure at the time was M3. Now, the Federal Reserve doesn't calculate that number anymore, and the Federal Reserve probably doesn't even want to calculate M2 anymore either to show these staggering figures. And if you look at these graphs, they are completely vertical as well. That's what we are living in. The game is over. They are doing their best to keep it going as long as possible in the hopes that people continue to buy into the narrative. And so far, so good, because as long as you're getting your stimmy check, I will sit down and shut up, won't you? Until it's too late, and then you're not going to be able to do anything about it. This is out of France. 24 ex-generals face sanctions after they warn of civil war in France. 18 serving officers who signed an open letter warning about the risk of civil war in France will face sanctions before a military council, the chief of staff of the armed forces said on Wednesday. Each one will go before a senior military council and could be delisted or put into immediate retirement. The open letter, published by a right-wing magazine, predicted that failure to act against suburban hordes or residents of mainly immigrant suburban areas and other groups who scorn our country will lead to civil war and deaths in the thousands. The main instigators of the letter are alleged to have ties to far-right anti-immigration movements in France. The letter went on to say laxist government policies would result in chaos, requiring the intervention of our comrades on active duty in a perilous mission of protection of our civilizational values. Okay, so it appears from this write-up out of France 24 that they want to put this on far-right fanatics, okay, which is very akin to what we witness here in the United States when MSNBC and CNN pick on anybody who wants to protest the government. Well, it must be some far-right radical group. And that's also something that needs to be paid close attention to, because President Biden mentioned how they are going to start perhaps looking at quote-unquote white supremacists, whatever that means, because they'll just define it however they want, as basically domestic terrorists. So he's basically going to perhaps weaponize the FBI and the Justice Department to look at these groups. So anybody, most likely, who's just simply white, who is protesting the government, could fall into a bucket that you are a white supremacist and you are a major threat to the United States of America. So it could very well be true that these military personnel over in France do belong to the right wing, but that does not mean that they are wrong in their assessment that a civil war could break out. It also doesn't mean that the current policies being enacted by the French government, that doesn't mean that they're not correct. Doesn't mean that the French are doing everything right, because they're not too. They are running massive deficits. They got debt out the yin-yang. It's the same song and dance, but now you are dealing with a major economy. Start with the weakest links, make your way up the chain, and here we are. Now, I hope that France does not break out into civil war, but I'm not going to be surprised because I've been talking about this for 2 years. People are upset, and we haven't even seen the full effects of the inflation yet. You have to recall the Arab Spring, back under the Obama administration, a lot of that was kickstarted because of food price increases. I mean, look how much money we have printed now compared to what took place then, which was shortly after the great financial crisis. It's no contest. Not even close. So, if that caused a problem 10 years ago, what do you think is going to happen now? You still got the locusts over in Africa? Yeah, I know. They're still there. I don't think they're as bad as they were, but they're still over there. I've come across an article the other day that they're still tearing up grazing fields and crops and everything. So you're still dealing with that. You still got all of these supply chain disruptions. You got a lot of weather problems globally that are already affecting crops. So on a supply-demand basis, you're already getting screwed over to higher prices. With all of the money printing from one government central bank after the next, you got that actual monetary inflation, which is going to make its way into these products, and we're already witnessing that with base metals, with industrial metals, with precious metals to some degree, and with agricultural products. This is going to continue. It is going to get worse. Revolutions are fought on empty stomachs. I say it here all the time because it is true. And so many poorer nations have to spend a disproportionate amount of their income on food. So the more they have to spend on food, the less they have to spend on other things. Sending their kids to school, opportunities in a job market, paying a heat bill if they have heat, if they're lucky enough to have heat, or electricity, or air conditioning if they're lucky enough to have it. They probably don't. Clean water, all these other things, medical care, all of these other products and services. They're going to have fewer dollars to spend on that. And we know the backlash that we saw in 2019 from one country after the next because of sometimes they were even small increases in taxes, increase in fuel or diesel prices. It was relatively small, but it was the final straw. These people were tired. They were sick and tired of being sick and tired, and they broke. And they protested and they rioted. Calls for revolutions. Nothing was fixed in 2020. In fact, it was all made worse. And so we're going to be dealing with these repercussions in this country and globally throughout the next couple of years. I think this decade is going to almost be hell on earth. That's not a pretty picture. I don't like saying it, but you can't do this stuff. You can't do this stuff and not expect negative consequences. But they're going to do their best to kick the can as far down the road as possible, and we'll see what comes of it. So, job or just a paycheck? It's your choice. Free money, I guess. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Kareitis. Godspeed.